Good morning, everyone, and welcome to our presentation. We are group number 7. This presentation is structured as follows. First, we'll go through a brief introduction about SoftLogic Life Insurance and then focus on industry analysis, ratio and investment analysis, and third part is profitability analysis, and finally, cash flow analysis. SoftLogic Life Insurance PLC, formerly known as Asian Alliance Insurance, is an insurance company in Sri Lanka. The company was founded in 1995 as Asian Alliance Insurance, a joint venture between Asia Capital PLC and Richard Pearis and Company. SoftLogic Life Insurance offers a wide range of life insurance products, including term life insurance, whole life insurance, and retirement plan. SoftLogic Life Insurance is committed to providing its customer with world-class life insurance solutions. The company has a strong track record of financial stability and has been awarded several awards for its customers and innovative products. Now to continue with the next part of the presentation, let me invite Ishini.
Thank you, Surakana. So let's move on to the Porter's FIFO's analysis of SoftLogic Life Insurance. They are having a moderate bargaining power of supplies with no alternative solutions for reinsurance existing in the industry. Also, the reinsurance partners are the key suppliers in the insurance industry and they exercise significant power as most as them are multinational firms. Their switching cost is high in life insurance as there is no surrender value and their fair product differentiations lead customers to stick with the product. Because of that, SoftLogic having a low bargaining power of policyholders. SoftLogic also having a moderate threat from substitutions because of less substitutions options are available for life insurance. Also, they are having a moderate threat of new entrants too. As you can see in the slides, existing rivalry is low because of availability of fairly differentiated product will soften in the competitions. Let's move on to the SWOT analysis of SoftLogic Life Insurance. Highly probability and growth over peers. Strong brand names of the group and well known as across the country are the strength in this company. Having low number of branches relative to industry and low product diversity compared to the industry leaders are the weaknesses in this company. As you can see in the slides, opportunities in this company are low penetrations of life insurance industry and steady growth of personal income levels. Equity market crashes and high exit barrier due to the regulated industry are the threats that have been identified in this company. So those are the Porter's FIFO's analysis and SWOT analysis of SoftLogic Life Insurance. To continue with the rest, let me invite Vidara.
Ratio analysis is a fundamental tool used in financial analysis to evaluate the performance and financial health of a company. Investment analysis is a part of ratio analysis that is used by companies in order to evaluate the potential investment opportunities to determine suitability to meet their financial goals and risk tolerance. In order to perform an investment analysis on the company in consideration, that is SoftLogic Life Insurance, we have chosen the ratios, namely earnings per share, earnings yield ratio, dividend per share, current ratio, and debt to equity ratio. Now, the earnings per share ratio shows how much the company have earned per share. As depicted here, it has increased from 5.6 rupees in 2021 to 7.2 rupees in 2022. Moreover, the earnings yield ratio has increased from 7.9% in 2021 to 8.3% in 2022, showing that the company is an attractive investment opportunity in terms of potential returns. When we calculated the dividend per share ratio, which calculates the dividend earned by an investor per share, it has also increased from 2.5 rupees in 2021 to 2.28 rupees in 2022. Moving on to the current ratio, since it has decreased from 5.7 to 2.8% in 2022, it's safe to say that the company is having difficulty meeting its short-term financial obligation compared to the last year. Now, when we look at the debt to equity ratio, we can see that it has increased from 28.9% in 2021 to 51.9% in 2022, which shows that the company is heavily relying on debt to finance its operations and growth, which can impose a potential risk in the long run. In this slide, moving on to the next slide, it shows that specific variances that have happened to the assets of the company in the years of 2021 and 2022, which gives us an idea about the risk, performance, and the operations of the company. Thank you.
Thank you very much, Vidara. Now we can look about the analysis of the profitability of SoftLogic Life Insurance. Profitability analysis is one of the main aspects of a company's financial management, examining how they generate revenue and profit. It provides valuable insight into a company's financial health and the situation, enabling investors to make informed decisions about their financial future planning and investment risk and resource allocation. First thing, gross profit. Yeah, you can look in our slides. There in 2021, they have a gross profit on 41.1% and 2022 30.6%. The gross profit margin went down even more in the 2022, going down to 30.6%. This means that company made much less money from its main insurance business in 2022 than in 2020 and 2021. And you can see in the net profit margin, not like gross profit margin, the net profit margin has increased by 1.62%. This rise in the net profit margin is usually seen as a good sign because it shows that the company was able to either make more money and spend much less on it. And in 2021, the ROE, return on equity, is to 23.1%. In 2022, it's went high by 2.8%, is like 25.8%. It might have used good business method or seen its business operation grows. And overall, return on total asset. Yeah, these number on return on total asset number shows that SoftLogic Life Insurance has made about the same amount of money from its total assets over the past 3 years, with a slight drop in 2021 and followed by a rise in 2022. Overall, the fact is in 2021, they have a return on capital employed is 22.1%. In 2022, it went rise up. And overall, the fact that the fact that basic EPS has been going up to over the past few years, saying that SoftLogic Life Insurance has been making more money over the past few years. And the asset turnover, as accounts payable turnover ratio went down little bit to 21.31% in 2022, even though it's a small drop. It shows the company may not have been able to collect payments as well as did that year before. And overall, the cash turnover ratio for SoftLogic Life Insurance for the years 2020 and 21 and 22 showed that the company has done a good job of managing its cash resources and putting them to good use in its activities during this time. That's all about the profitability analysis, and thank you very much for this round, and over to you.
Cash flow analysis plays the main role in the understanding and the managing the company financial health. Firstly, it offers the clear and picture of the how much cash of the business has generated or used within the specific accounting period, allowing for the better financial planning and decision making. Secondly, the maintain and financial health from the hinge on knowledge, knowing the inflows and outflows source of the money, ensuring the transparency and control of the financial resources. A company has been losing the money on the paper, but still sustain the positive cash flow, or the conversely. It can be highly successful in terms of profit, but suffer from the negative cash flow due to the poor cash management. To gain the more comprehensive understanding, complementary metrics such as the free cash flow, source and unlevered free cash flow can be employed, providing the unique insight into the company overall financial well-being. Softlogy Life Insurance has financed growth and company acquisition through the range of financial sources. First one is the retained earning. The operation of the Softlogy Life Insurance have the purchase a sizable amount of the retained earning. The company's expansion and including the creation of the new items and the construction of the more location has been financed by these revenues. The growth and the business acquisition of Softly Life Insurance PLC in 2020, 2021 and 2020 were mostly financed by retained earning. The retained earning made up the 53% and 58% and 62% of the company total funding for the business acquisition and expansion in 2020, 2022 and 2021 respectively. And other one is a debt financing. In order to finance in the growth of life insurance has been taken out of the loan from the banks and other lenders. This debt funding has been utilized invest to the new technology that finance to the purchase other insurance firms. The growth and the business acquisition of the Sology Life Insurance PLC in 2020, 2021 and 2020 were also largely financed by the debt funding. In 2022 and 2021, 2020 debt funding made up the 28%, 27% and 25% of the company total funding expansion and the business acquisition. And other one is the equity financing. Investors have contributed to the equity capital of life insurance as well. The growth and the business acquisition of Softly Life Insurance PLC in 2020, 2021 and 2020 have been not primarily financed by equity funding. Only 90%, 5% and 3% of the company total funding for the expansion and the business acquisition in 2020, 2021 and 2020 respectively.
Thank you, Ramesh. Softlogic Life Insurance PLC is not heavily dependent on external finance. As from March 31st, 2022, the company had a total of 2.5 billion in shareholders fund, which is more than sufficient to meet its financial obligation. The company also had a strong liquidation position with cash and cash equivalent of 1.6 billion. The company did borrow 0.5 billion from banks and other financial institutions in recent years. When examining the interest charge incurred from the firm, high interest cost is comparison to income could indicate the heavy reliance on debt from outside sources. The company declared an interim dividend of rupee 3.5 per share of the year under review out of the profit of the company. To meet the increasing demand of insurance product in Sri Lanka, the company has made investment in several areas. Softlogic Insurance has been investing digitalization to make it easier for customers to purchase and maintain their insurance policies. And also, company has been creating a new product in response to demand of dynamic market. For example, company recently introduced health insurance plan that pay for cancer treatment. Further, the company offer insurance product to bank customer through partnership with banks. And it has also made investment in its workforce and facility to improve customer service. The company investment in digitalization, new product, new market, collaboration, and customer service are all aimed to providing customers with the best possible experience. To continue the rest, let me invite Anne.
Thank you, Heshani. When we talk about what are the requirements and the type of financing of Softlogic Life Insurance PLC, insurance companies like Softlogic Insurance must adhere to regulatory requirements, including minimum capital and solvency requirements, licensing and insurance laws. They also need adequate capitalization to meet policyholder obligation financing options, including equity capital, debit financing, reinsurance, bank loans, policyholder premiums, investment income, and the profit retentions. And When we talk about the what are the managerial policy highly sensitive to each cash flow. Cash flows are a critical factor to determine the sensitivity of managerial policies within the company. Effective working capital management involves the managing current asset and liabilities to maintain a sufficient cash flow for daily operations. Capital expenditure decisions, dividend policy, debt management, and financial planning are all influenced by the each cash flows. However, not all policies are highly sensitive to cash flows, as some decisions may be more focused on long-term strategic objectives, market positioning, or customer satisfaction. Effective management requires a balance between optimizing cash flows and purchasing long-term strategic goals. Finally, when we talk about the overall analysis of cash inflows and outflows of the SoftLogic Insurance PLCs, SoftLogic Insurance PLC operating a cash flow decreased by the 1,859 lakhs compared to the previous year, but in the profit before tax increased by 35%. Major adjustment included decreases in the life policy holders by 43.65 percentages and the 289.24 percentages increase in the life shareholders. Capital expenditures and investors cash flow section showed a 35% increase compared to the previous year within the proceed from the sale of the investment securities, showing a variance of the 139 lakhs. Financing cash flows included dividend payment, shareholders, share buybacks, and debit insurance by equity holders increasing by 12%, and lease liabilities payment by 42%. The country net cash the company's net cash flow pattern showed a healthy cash surplus within the significant increase by 6.21 percentages in 2022. Thank you. This is the end of our presentation.